Hi and welcome back to today's morning report with me, Richard Perry, market analyst at Hantec Markets for Thursday the 30th of January. Going to be looking at cable now. Cable has been another of these dollar pairs that has actually been pulled back overnight in wake of this Fed tapering announcement of $10 billion. There's on this daily chart. I'm still okay with this chart. It still just looks a little bit corrective within this big long-term uptrend. So I'm not getting too upset about this on the daily chart yet. But if you look at the momentum indicators, for example, that the MACD remains above this zero line, which suggests it's in bullish configuration. The RSI a little bit more of unwinding back towards. That hit 46.5 just previously on the corrections, so maybe a little bit more to go on the downside, but certainly those momentum indicators are still in bullish configuration on the daily chart. On the intraday, we've had a breakdown again, as I said, on the drift lower. 65.24 broke down. What you've actually seen in the last few days, you failed to get yesterday. You failed to push back above that 166.24 level. You've now left a lower high at 166.06, and breaking down. Certainly in the last few minutes, this cable chart is coming back towards the test of this 64.72 level. The big move I think I'm looking at on this chart, or the support anyway, is this 64.45 level, which is the 61.8 Fibonacci retracement mark of the move higher from 63.08 to up to 66.67. And if that 61.8% retracement level gets broken, then that would certainly suggest that there's further downside potential in that correction, possibly even back towards that 63.08 level. So just watch out for that today, certainly in light of this GDP number that comes out this afternoon for the States. That could put downside pressure on cable once more. And certainly the first level I'll be looking out for is 64.72 on this chart. But certainly back underneath this 200-hour moving average, which is this black line on the chart. That had become a bit of a basis of support. That's now been decisively broken down. So I think the outlook for this on the intraday basis is now corrective back towards this 61.8% retracement mark, and from there we'll see what happens. But certainly that is on the intraday basis. On the daily chart, as I said, I'm not getting too upset quite yet. 64.72 looks fairly key certainly in the last few days, but the big mark on this daily chart is 63.08. That needs to be sustained in the coming days if this correction were to continue. Anyway, I thank you very much for listening, and I hope you get a chance to listen to our euro-dollar chart that's on the website, also on the gold chart, and also dollar-yen, and our chart of the day, which is the S&P 500. I wish you good luck in your trading, and I will speak to you soon.